Good morning and welcome to the market forecast. Today is Monday, July the 19th. As always, we're going to be looking for accurate context, good risk management, and patience in our trading today. We've got a big change in the markets this week. We've got some markets really under some pressure here. We're going to do our best to take a look at these markets, see where some of the visual levels where price may go, and always again try and remain very, very patient, of course. As far as economic numbers this morning, 9 o'clock, the housing market index is due out. Now, there's not a lot of economic information due out this week. We have housing starts and permits tomorrow, EIA on Wednesday, jobless claims as usual on Thursday, existing home sales, misleading indicators also on Thursday, nat gas report on Thursday, and then the PMI composite flash on Friday. So that without a lot of economic data due out, we're going to be really kind of focusing, I think, as far as investing and index futures are on earnings. We've got a very busy week of earnings coming up this week. As far as the equity markets today, yeah, they're going to open sharply lower, largely blamed on a surge in COVID infections. But if you were paying attention in the forecast last week, we were kind of saying that the auction to the upside was getting tired. It was exhausting. This pullback may be as much about market internals as it is about COVID. We've got a little feud going on with the president and Facebook. He's not happy about them allowing anti-vaxxers to post about the vaccines. COVID prices are also feeling the pressure, currently below $70 for the first time in about a month. And again, we've got a very busy week of earnings ahead. As always, checking into the VIX, 18% higher this morning, 2178. Markets go lower, volatility increases. Dollar index also up 92.93. We haven't seen it up there in quite some time. And the 10-year yield on the floor here at 1.23. You look at the Treasuries, you can see where the money is moving from stocks into the Treasuries. As always, I like to say good morning to everyone. Good morning, Murph. Jorg, good morning. Yes, I hope everybody has a good week this week. As always, Brian, Tone, George, Jason, Bill, Jim, Caesar, Andre, Nico, Frederico, Zorain, Drones over Texas, good morning. Ryan Williams, Vici, Greg H., good morning. Rob T., Lemur, Joe West, and Chris Hayes, good morning to everybody. I'm going to pop the link to join group coaching this Wednesday at 1 p.m. As always, we'll be sitting together for about an hour just talking to traders about trading. Always one of my favorite parts of the week. I know on Mondays tend to not be my best trading day, so I'm taking it relatively easy. I'm going to try and stay real patient and wait for the market to give me a good opportunity. The markets are in the process of telling us where they're going all the time. It's up to us to be able to recognize and take advantage of those opportunities. Just lost my charts. Let me get those up. It just irks me when this happens. Apparently, I have not been able to yet exercise the gremlins in my computer. But let's get started and take a look at what we're seeing here. All right. Here's the daily in crude. Obviously, we are testing weekly kickoff low already this week. We've broken structure to the upside in a couple of different ways. Last week's weekly kickoff low was, I think, 72. Now we are down at, where is it? 68.90 as far as the weekly kickoff support level may be. OPEC increased to OPEC finally agreed to a 400,000 barrel per day increase in production. Maybe that's another reason why the market has been heading to the downside, but I know a lot of users and producers alike were looking for a bigger jump. COVID fears, of course, reducing demand expectations. We've got approximately a 67.20 naked point of control from way back here. It's right in that area, and I'm not sure that that's precise, but nothing is finite or precise in futures trading. We've got weekly kickoff low here, 68.90. We're going to open right around there. Well, we just did open right around there. We're going to see if this market offers an opportunity quickly off of that level. Take a look at the 30-minute chart now. So the settlement is all the way up here, 71.56 settlement price. All of our overnight activity has been to the downside. So we're holding some overnight shorts in this market. Can't see if the opening range is neither the high nor the low here, but there's just the fact that we're this close or right on basically I'm going to move this down just a little bit. That's more like it. Right on this inflection level gives us the opportunity to limit risk. Either direction from here, we're going to be able to limit risk. If it just falls into magnetic activity around this level, of course, we're going to have to hold off and wait for a move away from that level. We've got 4 bars here that are basically wrestling with weekly kickoff low. This is going to be an interesting one. Gap rules. We got a gap. We can't close the gap relatively early. We look for opportunities to trade in the direction of the gap, which is to the downside. Again, can't see if we have an opening range trade, but the fact that we're opening right on an important inflection level could give us an early opportunity for a move. Okay, look at all this. The S&Ps are really riddled down below with areas of unrechecked points of control, gaps. This is really just the beginning of it. There's gaps all the way back to March of last year. Those are not going to be that important unless they become important, unless we start heading in that direction, which is why I have all these points of control in this little gap here notified or presented on this chart. We've broken upside structure here. We've broken upside structure here at 4,300, our weekly kickoff low. Now we've got all of these targets to look at. It's going to be a very tempting opportunity. There's going to be a lot of tempting opportunities to try and pick bottoms. Try not to do that. There's a lot of anxiety that I'm sure a lot of us are feeling. Try not to succumb to that anxiety. Try and remain patient and look for the right opportunity. We're going to miss some moves here. Let's just face it. It's going to happen. We can't be upset about that. We just got to sit back, relax, and look for the right opportunity for us to be able to profit on that. I'm going to get the charts back up here again. And again, my sincere apologies. That's not what I want. And here we go. So here's the 30-minute chart. Well, we lost 4,400 in open interest on this move down here below this trend line. Long liquidation. Long liquidation. We're going to see more long liquidation today. The more we see, the more we take selling power out of the marketplace when this thing does turn around. When and where? Nobody knows. Settlement up here. 43.18.5. We had a late spike to the downside on Friday. We've opened below the late spike. This is marking acceptance of price, of lower price. But we've got all of this space up here with which to find pullbacks to look for opportunities to trade in the direction of the gap that we will be creating today. Here's another gap. Here's a point of control, point of control. We're at a point of control right now. These are naked points of control, visual levels that traders tend to look to. And when traders are looking at a specific level, they tend to push price to that level. Which one is going to be the one? Where is this thing going to terminate this move to the downside and move back up? We don't know. We can only try and get the pullbacks in the direction that the market is telling us that it's going. We've got the whole moving average is lower. We've got the 20, we've got the 50 exponential moving average, all moving lower. I'm not looking for any opportunities to buy any, to try and pick any bottoms here. That said, watch, this will be the bottom. This point of control tested, this not, nor has this gap or these points of control lower. There may still be some continuation to the downside, likely. Nasdaq. I'm just hoping that with the rhetoric or the vocabulary that I was using last week, explaining how I thought that this upside to the movement was getting tired, has helped all of you try and trade to the short side. I know that it's difficult, especially when we get chewed up as shorts the whole way up. When it finally comes time to be short, we get shy. Breakout one is done. We're below this trend line. We're off the center line that we've been on. Break number two would be a break in the weekly kickoff low here, which is 14,470. We've got, last week's range may be somewhat supportive. Now I'm really looking for an opportunity at that 14,470 weekly kickoff low before I really start to look for anything in the opposite direction of the direction that this market is attempting to go. There's still, same thing, many weaknesses below. We're going to see those here on the 30-minute chart. Okay, we've got weekly kickoff low. Then we've got the same kind of area here where there's lots of unrechecked points of control and a little gap down here. So this is going to really be kind of a cool opportunity for us to see if price gets to that weekly kickoff low. It tried to last week, got really close to the weekly kickoff high. Now it looks like we're going to be testing the low. Again, whole moving averages indicating that momentum is still to the downside, but now maybe waning a little bit. We can see our whole moving averages, at least in the Nasdaq here, are holding below price. We've got the 20 and the 50 session exponential moving average, both moving lower. The 20 acting as resistance pretty much all day long, all night long. So again, we are going to be looking for opportunities to trade in the direction of the gap if we can't close the gap. And there goes the charts. I do apologize. That goes for weeks and no problem, and then all of a sudden I have a problem with my charts. Bummer. Okay, so where was I? Overnight shorts, gap rules, weekly kickoff low would be very interesting for us to see if we get down there in the Nasdaq. Gold, where's the money? I guess we had a pretty deep move back to the downside, but money coming back in now here in gold. We lost 5,200 on Friday, a little bit of long liquidation it looks like. We've had the opportunity to really kind of stay in this range-bound area, even though a pretty volatile move to the downside and back to the upside today. I was really kind of saying before we had this pullback here this morning that pullbacks are likely in balance or largely in balance because we're still kind of in balance here. Overnight open interest indicates long liquidation. We kind of mentioned that already. Short time frame control inside weekly kickoff levels. Where's the comfort? Where are people taking their money from in the stocks and putting them into the Bitcoin lower this morning? Gold started the day lower. Treasuries we know are on the upside. Take a look at the 30-minute. The opening range, it was initially the high of the session, which had us give a little bit of a push down towards 1791, our weekly kickoff low. Unable to get there was last week's low, or it was tested before, at least, not last week. Let's see here. 1, 2, 3, 4, 5. So yes, last week's low was weekly kickoff low. Last week's high was weekly kickoff high. They didn't change these this week. Those were already there. So now we've got a push to the downside, unable to hold the opening range, the high of the session. We got a pretty good push to the upside, and guess to where? Right back to settlement. Settlement price target for overnight inventory adjustment, and I believe that's exactly what this is. Let's take a look at the euro. Euro's on the downside here a little bit with the dollar creeping to the upside. We've got largely range-bound activity. I'm thinking that this is more short time frame control than anything else, but of course that can change in a heartbeat. The dollar strength is keeping price up to the downside. Pretty decent opportunity down here at last week's low. Open interest increased on Friday. In range kind of indicates that there may be a change coming. We added 5,800 on a very narrow range on Friday. So here's our opening range. Is the low of the regular trading hour session. Last week's low right in the neighborhood. Obviously, we're getting a nice little inventory adjustment. Overnight sellers holding shorts, getting nervous and bailing out as the market opens. Looks like a gap close just right now. Look at this market to get back to. Perhaps this is not a weekly kickoff level, by the way. I'm just going to remove this. Look for it to get back to point of control / settlement price. And here's the Treasuries, all to the upside here this morning. Risk off, Treasuries on. Weekly kickoff high now will probably present itself if revisited. A measured move of this market puts this next possible. Oh, there goes the charts again. Hang on one second. This should be the last one of these, and I'll work on that again. And here we go. They are back. So a measured move puts this market up near 135.20. 135.20. It's a pretty decent move. And it's entirely possible. If rates keep kind of getting pressed to the downside, most definitely a possibility. Take a look at the 30-minute chart. Settlement all the way down here. So we've got, another overnight long inventory that seems to be continuing to get paid. As long as they continue to get paid, if there's new business, new buyers, new activity to the upside here, they're going to hang in those longs for as long as they can. If they start to get the idea that they're not getting any help from regular trading hours, longer time frame, bigger money traders, then they may bail. It could take us back to this point of control, which was checked on Thursday, but it's also the high from last week, which could be a nice supportive level for us. So looking for pullbacks, as long as rates keep slipping, and as long as equities continue their push to the downside. If there's a major change in direction in equities, all bets are off for any support at this level, if that is the case. Looking for pullbacks. Looks like this market has some good momentum to the upside. I'm not going to fight any directional moves. As we get closer to a more volatile situation here, perhaps in the equities, which may last for a while, it's so tempting to try and buy every new low or buy some new lows when the market is pushing to the downside. We saw that, and you probably felt some of that if you were still in the markets or watching the markets on Friday when the S&Ps put in that big spike to the downside. It's very tempting to say, well, it can't go any further than this. This market eats shorts. Well, it did not on Friday. It started on Tuesday or Wednesday when we discussed the auction process and the upside in the equities was struggling. We need a pullback, and it looks like we are getting what we were looking for. All right, so we got plenty of time here before the equity open. It's Monday. Take your time. I want to mention something. The group coaching on Wednesday is going to start getting a lot of company. I'm going to be adding some free education and coaching sessions. Don't have a date for it yet, but look for information. You're going to find out here first as to when that's going to begin. We're going to start with the beginnings of futures trading, and we're going to go all the way through a lot of expert material over time. So I'm looking forward to having those sessions, and hopefully you're going to be available and interested, and we're going to see how these go for a while. So, all right, Vince, good to see you. Jacob, Keith, Ocean Blue, and Frederico are in a bear market. I don't know about that just yet, but we could be headed in that direction. Certainly seems to be so far this morning. So on that note, we're looking forward to seeing Dan for the market recap today. And let's take our deep breath. Patience, grateful, and patience today. Get out there, profit, be patient again, look for the right opportunity. It's going to come to you. Have a great trading day, and we'll see you tomorrow at the Market Forecast. Milan. Any suggestions as to time of day when those should be presented would be appreciated. If anybody has, if it's lunchtime, then it's lunchtime. Let me know what you think. You got time. We'll be talking about it a little bit over the week. Trade well, everyone. Hey, Theo.